Hello, I'm Sunanda Jha from Lavan Investing and welcoming you to our weekly webinar. And before moving to our topic of the week, we would like to wish you a happy and a prosperous Diwali. For today's topic, we have why Indian equities? The most important question asked regarding the portfolio exposure in terms of Indian economy for the next 5 to 10 years plan. To talk more about the same, we have Vijay Raj, the portfolio manager of Lavan Investing, along with different investment manager who would share their insights on the topic. So let's get started.
Hi, good afternoon. My name is Vijay Raj. I'm a financial planner and investment advisor with Lavan Capital. And it's a nice, beautiful day, Wednesday. Don't want to go to work. That's one of the bad things. But I wish work from home is better or not. That I don't know about that. But let's see how it goes. But at least feeling better at home, and wife is not happy. So that's one of the good thing or bad thing, I don't know. But yeah, I mean, she always, if I have a couple of drinks at home, she shouts at me. Anyway, let's go on to the macro themes, what's happening in the world. We just discussed like the last week and so a few things, and let's talk about some investment options, particularly into the emerging market. So in the emerging market, the world is changing, the global dynamics are changing. In that scenario, what's happening into the global GDP, global growth, where the growth is coming. So let's start moving with Indian macro themes, because as always, trend is my best friend. So what is the next trend coming up? Where are the emerging markets? So if you look around India, what are the scenarios? What are the macro factors that are playing role? Let's look into a couple of factors. First, I discussed this slide, I think 2 weeks back when we were talking about the global asset and those things. So we saw that 50% growth rate coming across in the Bombay Stock Exchange in the last year time frame. You can see that blue line just crossing up. As always, a couple of big factors, if you look at in a very short before you go to a couple of slides. So the first one is the biggest population. So I think, oh my God, Pooja, how much is the population? 1,250 million now, right?
Yes.
So very, very, very big population. So that's one of the things which we need to be looking around. So that's a big population. So much is a demand, young population, educated population. Look, with the education, I think the education standard and the professionalism is a little bit low. But I think, the another 3 to 4 years, I think with the young generation of the internet generation, things will be going to change, and we look forward to more professional people. And that will really, the youngest country, that will change the world in next 10, 20 years. Yep, that is one of the things. Again, if we talk about the macro political scenarios, the political is a little bit India-China drama is going on, India-Pakistan drama is going on. Then you have an Afghanistan over there. And then you have Iran, so very, very volatile area. So that is a geopolitical scenario we need to be taking care of. But I think now the world has a little bit, we don't expect that the world war type, I don't know, but that's my opinion, that at least human beings in the 21st century are a little bit better. So that's I may be wrong, but that's my opinion. If we talk in more detail into this one, another factor is growth story, because the growth engine, so which are the driving the growth, with the driving the tailwinds and those things. So the demand coming up, disposable income, that is increasing across. So in last 20 years, I think India in the first 50 years of they had a very, they call Indian growth rate of 3%, 2%, 2 or less than 2%. The whole licensee Raj and those things. But after 1991 to 2000, the liberalizing the economy and a couple of sectors, that has driven the almost 9 to 10% growth on average for last 20 years. So that was absolutely great. Then this Modi government coming in, that had changed up the little bit scenario. I'll talk in more detail about that, please. Now, the consumption story. So what is the consumption story? The consumption story is such a big population, and that's consuming the whole thing. That's creating a very, very, very big demand into the whole market. And by 2028, that will be going to increase 3 times, so 330 trillion rupee in the rupee terms. So that's a big demand that will drive a lot of big companies to become a bigger sectors, particularly the couple of best sectors. If you talk about the pharmaceutical, banking, automobiles, that will be, I mean, massive scale growth in next 10 years that we will see. And you can see on the retail market, so many people standing in anywhere. Please forward. Again, the rising savings, which is one of the important factor, because the stock market, what drives the market is the interest of the people, the money flowing in the market. The money flowing in the market, lot of IPO companies coming in. In that IPO, those big companies then grow further on. So this is a very, very important thing to be having the fundamental basis. So the saving is a very important thing into the whole economic system. For moving forward, if you see, for any market, the interest of the shareholders or the interest of the exchange board, and creating that confidence in the population, that has changes the world. And India is fairly doing good and changing up. So like US market is the biggest market, but then 55% of US population is a retail investor. In China, the retail investor is almost 12%. In India, it's very, very less, 3. So there is a long growth. So you think of out of those 1,250 million people, if those people come in, 50% of that come in seek at the market would be unbelievable. So that we need to be. Pooja, what do you think? Am I making sense?
Yes, absolutely, Vijay, because this chart shows that how individual retail investors in Indian equities markets have been of total population, the percentage is 3.7. So that's absolutely true. Moving to the next slide, where we see the growth potential, India could follow China. So in terms of retail investor participation, China is probably a model of what you can expect will happen in India. So India could be easily equal China's market cap in the next 5 to 10 years, because going forward, growth in India's market will probably be faster. And China, because of its size, will probably grow more slowly. Yep. So yes. And now we have the
this one is like this is a very good estimate. So in 2016 and just in last 1 year or 2 years, 10 million new accounts have been opened. So I think half of Australia I mean opening up a new stock market investment account. So that's a big jump, very, very big jump. So that is a retail investors' interest showing up. Yeah,
absolutely. So in this chart, we can see the active retail investor accounts rose by a record of 10.4 million in 2020. So according to the data from the country's 2 main depositories, raising hopes for growth in Indian equities as the nation is second most populous country in the world. Yeah. So can we have the next slide? Yeah. So
this chart, one is Pooja. So if you look still the whole $100 as a you consider, then still a lot of money is in gold and the bank deposit. So even if 3, 4, 5% comes in here in next year, that is also massive growth of the system will come in.
Absolutely.
Yeah, so that's a good sign of market booming. And as we talked about 48% return coming in last. So I think there will be double-digit growth for next couple of years. So that what happens same with the Chinese alpha shares and those things. Please.
Absolutely. So this chart illustrates how India's citizens' wealth is currently positioned by asset type, heavily skewed to property, gold, and bank deposits. While equities with only 4% of allocation, we see there is a mix changing in favor of equities here. So moving forward, the rising liquidity, improving image of equities, regulation is also improving in favor of the smooth functioning of the Indian equities market. So in 2017, SEBI created a warning system called the graded surveillance measure to prevent unwarranted price swings and manipulation of stocks with a market capitalization below 250 million rupees. So that's where SEBI has focused on safeguarding the interest of retail investors with measures such as raising financial literacy, improving transparency, and increasing regulatory requirements for the brokers. Yeah,
Yeah,
moving
look,
forward.
I think you're absolutely right. I think they brought some changes. I was reading some article and that the brokers, they got more scrutinizing of the brokers, and simultaneously like I think in past like Satyam scam and those kinds of things happen. So now they are much more stringent, and I think they are. I think I would use this word that Indian markets and a lot of other markets are getting together and the world scale, and they try to, because a lot of countries, like it's a global globalization of the financial system that's happening now. So in that scenarios, every country is interested that their money is safeguarded. So that's why the lot of exchange of informations and technology and those things happening. So that will make a big impact as well from the regulatory perspective. Yep.
Yeah. So coming to India's stock markets, which is BSE and NSE, let's now take a look at the two major stock exchanges. So BSE, since 1875, it has more than 5,000 listed companies, and these 500 companies have 90% market cap. So the total market cap is $2.3 trillion, whereas in NSE we have since 1994, and the listed companies is 1,800. So these are the two major stock exchanges in India. Moving forward, we have Sensex and Nifty 50. We can see here how the benchmark indices at the two exchanges have performed over the last 5 years. There was steady growth in the indices heading into the pandemic sell-off, and post the sell-off, the growth in prices has been steep. So there is a rise if you see in this chart in Sensex and Nifty 50. So yeah, this chart gives you more look into the largest market cap stocks in the Sensex index and how much total returns they have delivered over the past 5 years. Technology, finance, and consumer stocks have been running very well. Fossil fuel-based energy companies have been struggling. So that's how the Sensex has been performed since last 5 years.
Yeah, I think this the bank, the Hindustan Unilever, that's a Unilever of that's global company as well. I mean, almost the Unilever in Hindustan Unilever, that's called, it's almost double in, so that's a massive. And the Reliance as well, and the Asian Paints is one to if you get that Bajaj 400%. My goodness, I would be into that company. Oh, the Tech Mahindra which we talk about, that's a Satyam. You know, that's what we talk, that the Satyam was taken over by Mahindra people, and I think they are getting right into the IT industry now. So that's a massive growth as well. Yep, Pooja, thank you.
Absolutely. Can we have the next slide, please? Yeah, so the stocks are driven by brand value and strength. The Tata Group of companies here was the most valuable brand in India with a value of more than 21 billion US dollars in 2021. So brand value versus brand strengths. While brand value is an important indicator for a company, the brand strength index is a crucial driver of the brand value. So that's where we can see in the chart about the brands and the strength and the profit they have earned.
Yeah, Pooja, I think couple of brands, these are world brands. I think Tata, I mean, 60% of the income that Tata is generating, that is coming from overseas, not in India. So those kinds of big multinationals are coming up. So we need to be looking at Indian banks, and those things are now slowly growing up. And yep, and a lot of even the major banks, where public sector banks, they are government is going to privatize and making it more efficient. So that is a lot of good signs on the economy coming up.
Absolutely.
Please.
So moving forward, we can see this pie diagram which sector have built up much of the nation's corporate brand values. Of course, what we had discussed in the previous slide. Investor may consider positioning their portfolios in line with these brand weightings. In 2021, the share of brand value of conglomerates in India was 26%, while banking sector companies came second with a share of 16.3%. Incidentally, the insurance sector had the lowest share in the brand value, as we see in the pie across the country. So this is the pie diagram which represents the corporate brands. Next slide. Yeah, big is better in India. So brand values are developed with heavy investments and usually take time. In India, big, well-connected businesses win more often than lose. They are akin to smart capital. So that's where if we see these
Yeah.
conglomerates, they follow the family traditions like
Yeah, Pooja,
Tatas
I
and
think Pooja, I think if you look around those big pictures, I think that's the world's richest man. Reliance, Mukesh Ambani, Anil Ambani, they are the I think, biggest, richest people, and Reliance Enterprises, I think Geo and those, they're doing massive into that. And the second big picture is Ratan Tata, I think the head of the Tata Group, chairman of the Tata Group. And then you have Anand Mahindra, the Mahindra Group of companies, and the Bajaj guy, the owning of the Bajaj Finserv and Bajaj Auto and those things. Yes, and now it's massive. They grew the company really very very good in last 20 30 years. Very excellent. I think some of the leadership, I mean, in any business or anywhere, the leadership culture and those things are very important. So I think the system is having the top level head office, and then the culture going across the board. So I think, I mean, I've been when I was in India and I think those companies, they had a real great culture. I mean, fantastic.
That's true, because it's one of tried and tested strategy that works in India, which we have seen noticeable presence of conglomerates in the Sensex, and their positive returns are just impressive.
So I think we agree with that. I think this one is one of this bank's privatization. I think I think that is a long view. I think they should have done way back in 2005 or 7, but I think due to political pressures and those things are not happening. And I think once upon a time in 2013-14, the non-performing asset was approximately officially, they were saying around 15%. Now, for a bank, because bank is the main liquidity, monetary policies and banking are the main engine. Now, in that scenario, a bank is having a 15% non-performing asset. I think then they came up with some regulation that a bank has to give out the real figures of non-performing asset, that if somebody or a customer haven't paid the money for next 3 months, the areas and those things, then put in the non-performing assets. So particularly this happened into a lot of big conglomerates as well, big companies as well, not on a lower scale, but on a higher scale. The big companies, they did failed onto that one. So that was one of the, I think, a lot of political scandals happened into that non-performing. But I think they are getting some good regulations, and they are making some good structural changes into the sector. So there are a lot of good news, and I think the government is consolidating these banks as well, merging of those banks and creating 2 or 3 big banks. I think that's what's happening. But again, look, India is a big country, a lot of people, democracy, very crowded scenario, and so it's a very difficult job as well, not that easy. Not like China, you order something and next day you got the things done. In India, you order something and then you get all the people on the road, guy, we cannot do it. So that's a challenge with that. I don't know, but that's what bank's privatization is. But if it has its due now. Thank you.